Hey everyone, and welcome back to Talk Tickers.
Always a pleasure.
We're diving into Wynn Resorts' latest earnings call today.
Yeah, some really interesting stuff in there.
Yeah, I think people are going to be pretty surprised.
For sure, a lot going on with them.
Okay, so overall, another record year for them.
Yeah.
Driven by strong performance across all their properties.
Especially Vegas.
Especially Vegas.
It's impressive, considering the economic environment, how they're navigating things.
Yeah, they seem to be doing pretty well for themselves.
Really capitalizing on the opportunities out there.
Okay, so let's start with the Vegas Strip.
Okay.
Always a good place to begin, right?
Yeah.
Their adjusted property, EBITDA, was through the roof.
It was.
Even though it was actually down slightly compared to Q4 2023.
Right.
But that's coming off a record-breaking year.
Exactly.
So not exactly a cause for concern.
No, I think it's important to look at the context here.
Right.
Demand was still strong. Table game drop held steady.
Yeah.
Slot handle up 13%. So, shows they're still the go-to for a lot of people, and that's reflected in their market share growth.
Absolutely. Now, Vegas loves its big events.
Of course, yeah.
And this past year saw two massive ones.
Huge.
Formula One, and the Super Bowl win was right in the thick of it, hosting both.
Yeah, front and center.
So let's talk about the impact.
All right, well, Formula One, it was a huge spectacle.
It was insane.
It really was.
So much fun.
But it didn't translate into the revenue some might have expected.
Right.
EBITDA during that week was about $20 million lower than the year before.
Interesting.
Partly due to lower room rates across Vegas.
Yeah, I heard about that.
Some hotels were practically giving rooms away.
It was crazy.
Trying to just fill the room.
Yeah, but that wasn't the case for Wynn, was it?
Not at all. They actually charged 50% more for their rooms than their competitors.
Really?
Yeah, it tells us a couple things. First, Wynn's not afraid to prioritize profitability over volume.
Okay.
Especially during these mega events. And second, their luxury offerings are clearly resonating with certain clientele.
Yeah, the people that can afford it, right?
Right. They're willing to pay top dollar.
So they're really doubling down on that high roller market.
They are.
Even during big events.
Mm-hmm.
Now, the Super Bowl was a different story, wasn't it?
It was hosting the Super Bowl. Their major win.
Yeah. Big
boost to their Q1 2024 earnings.
For sure.
But that also means they're facing a $25 million EBITDA headwind in Q1 of 2025.
Okay.
They're not hosting it again.
Right. Yeah, that's a pretty big swing.
It is.
But even without the Super Bowl boost, sounds like they're starting the year strong.
They are. If you take out that Super Bowl weekend,
okay,
key volume metrics for Q1 2025 are already up.
Really?
Compared to last year.
Wow.
So it suggests that their success isn't just these one-off events.
Right.
But it's solid operational performance.
That's really impressive.
It is.
Okay, so Vegas is firing on all cylinders.
Uh-huh.
Let's head over to Boston. Wynn's Encore Boston Harbor also turned in a strong performance.
Yeah.
Pulled in nearly $59 million in adjusted property EBITDA, and their slot business is booming.
It is slot handle, up 6%, setting a new record for slot revenue.
So they've really replicated their luxury experience there in a different market.
Yeah, what's interesting is that Boston's a different beast than Vegas.
For sure.
But they've managed to capture a loyal following there.
Seems like they've cracked the code on adapting to different regions.
Yeah.
Speaking of different regions, let's hop across the globe.
Okay.
Touchdown in Macau.
All right.
Which has had its ups and downs recently.
It has a fascinating market. Macau is.
It is.
So much potential, but some unique challenges.
Yeah.
Wynn's operations there generated $293 million.
Okay.
In adjusted property EBITDA. Right. Which was down slightly year over year.
Okay.
But up 11% from the last quarter.
So a bit of a mixed bag.
Yeah.
But trending in the right direction.
It seems to be. What's interesting is how they're responding to the changes in Macau.
Okay, how so?
They're rolling out new digital tables.
Oh, wow.
Which could streamline operations, boost margins.
So appealing to a more tech-savvy crowd.
Perhaps, but they're not forgetting about the high rollers.
Right.
They're expanding their Chairman's Club.
Oh, nice.
Catering to that VIP experience.
Makes sense.
Yeah, got to keep all your players happy.
For sure. Now, for the really exciting part.
Okay.
The mega project in the UAE.
Yeah.
Wynn Marjan Island.
It's gonna be big.
This thing is shaping up to be a game changer.
It really is. Construction is well underway.
Okay.
Towers already at the 35th floor.
Wow.
And get this, they just secured $2.4 billion
What?
in financing, the largest for a hospitality project ever in the UAE.
That is a massive vote of confidence.
It is. They're sparing no expense.
So they're really pulling out all the stocks.
It's going to redefine luxury in the region.
Wow.
Investors are clearly betting big on Wynn's ability to deliver.
So they've got Vegas humming, Boston thriving, Macau on the upswing, and this massive project in the UAE taking shape.
Sure.
Plus, they've been buying back shares.
Yes.
$200 million worth in Q4, another $150 million in Q1 of 2025.
Wow.
And on top of that, they just announced a $1.25 per share dividend.
You know, for those who might not be familiar with these concepts, let's break it down quickly.
Yeah.
When a company buys back shares, it essentially reduces the number of shares out there,
Okay.
which can boost earnings per share and increase the value of the remaining shares.
So it's like saying, hey, we believe in our company so much,
Exactly.
we're buying up our own stock.
Yep.
And dividends are a way of sharing profits with shareholders.
Exactly. It's a way to reward investors for their support and their confidence in the company.
So they're investing in growth through expansion projects, like Marjan Island.
Yeah.
But they're also returning value to shareholders.
Right.
Through buybacks and dividends.
Powerful combination.
That is a powerful combination.
Yeah.
Okay, we've covered a lot of ground here. Vegas, Boston, Macau, the UAE, share buybacks, dividends.
Oh.
Wynn's certainly keeping busy.
They are.
Now, are you ready for our This Is Not Financial Advice segment?
Oh, I love this segment.
Where we let our imaginations run wild.
Absolutely. This is where we get to explore a bold, speculative trade idea.
Okay.
Based on all this information.
Right.
But remember, folks.
Yes.
This is purely hypothetical.
This is not financial advice.
Definitely not investment advice.
All right, so here's the scenario.
Okay.
Wynn's clearly betting big on international expansion, right?
They are.
Marjan Island's a massive undertaking.
It is.
And there are rumors swirling about them eyeing other markets.
Like Thailand.
Thailand, exactly. And while these ventures hold immense potential,
they do.
They also carry inherent risks.
Of course.
Construction delays, regulatory hurdles.
Unforeseen economic shifts.
All that stuff.
Yeah, any of those could throw a wrench in the works.
So here's the play. If you're feeling adventurous and have a strong belief in Wynn's ability to overcome these challenges, a long-term LMP call option on Wynn Resorts might be an interesting way to leverage their global ambitions.
Now, for those unfamiliar, LAP options are long-term options contracts. Typically expiring a year or more out. They can offer significant leverage. But they also come with significant risk.
Of course,
If Wynn's expansion plans hit a snag, these options could expire worthless.
Exactly. So this is not for the faint of heart.
No.
High risk, high reward. And you should never invest more than you can afford to lose.
Absolutely. Always do your own research.
Yes.
Consult with a financial advisor.
Please.
And understand the risks involved before making any investment decisions.
This is not financial advice.
Not at all.
Okay. Now that we've gotten the disclaimer out of the way, let's dig into why this LA Paul idea is so intriguing. Even if it's a bit out there.
It is a little out there.
If Wynn successfully executes on its global vision, we could see a significant revaluation of the company.
Right. And LAP calls with their time frame allow you to participate in that potential upside without needing to tie up as much capital as buying the stock.
So you're essentially betting on Wynn hitting a home run with these expansion plans.
That's right. And if they do, those LAP calls could generate some serious returns. But again, this is highly speculative. It's crucial to weigh the risks carefully.
Always, always, always.
Always.
Okay, so there you have it.
All right.
Our This Is Not Financial Advice segment.
Fun stuff.
A bold, speculative trade idea based on Wynn's ambitious international expansion plans.
Absolutely.
Remember, folks, this is all hypothetical.
Purely for entertainment purposes.
We're just exploring possibilities.
That's it.
Not giving investment recommendations.
Nope.
Now let's take a step back from the speculative realm. Really analyze what these earnings results tell us about Wynn's overall strategy and their positioning in the market.
All right.
We'll dive into that in part 2 of our deep dive coming up right after this.
Sounds good. All right, so let's shift gears a little bit.
Okay.
And zoom out to get a broader view of Wynn's strategy.
Right.
What jumps out to me is their commitment to the luxury market.
Oh, okay.
They're not trying to be everything to everyone. Yeah. They're laser focused on attracting a specific clientele.
Yeah, that high-end exclusive vibe.
Exactly.
But it's not just about gaming anymore, is it?
Yeah, no.
They're creating these immersive destinations with top-notch dining, entertainment, shopping.
A whole lifestyle package.
A whole package.
Yeah. Wynn understands that today's luxury consumer, especially in travel, isn't just looking for a place to gamble.
Right.
They want a curated experience.
Yeah.
A sense of exclusivity and access to world-class amenities.
Makes sense.
This shift from a gaming-centric model to a more holistic lifestyle brand is key. Right?
Especially as they expand into new markets.
Right.
Like the UAE, where gaming might not be the primary draw.
That's a really good point.
Yeah.
They're not building casinos. They're building resorts that happen to have casinos.
Right. A subtle but important distinction.
Yeah. Okay, let's circle back to Macau for a moment.
Okay.
It's been a bit of a roller coaster ride for them there, hasn't it?
Macau's a unique market.
Yes.
So much potential.
Yeah.
But also facing some significant headwinds.
Like what?
Increased competition, evolving regulations.
Okay.
And, the lingering effects of the pandemic.
Right.
But what impresses me about Wynn's approach is their focus on profitability.
Okay.
And disciplined capital allocation.
So they're not chasing market share.
No.
At the expense of their bottom line.
Exactly. They're being very strategic, even in a challenging environment.
Not just throwing money at the problem.
Yeah, they're carefully analyzing the landscape.
Okay.
And making calculated moves.
That's smart.
This disciplined approach is a hallmark of their overall strategy. I see.
They're not afraid to make bold moves when opportunity arises.
Right.
But they're always doing so with a keen eye on the long term.
Makes sense.
It's a balance between ambition and prudence.
I like that.
Yeah.
Okay, let's talk about their capital allocation strategy, which you touched on earlier.
Sure.
They've been aggressively buying back shares and increasing dividends.
Yep.
What's the signal they're sending to investors?
Well, share buybacks are a way for companies to return value to shareholders.
Okay.
By reducing the number of outstanding shares.
Okay.
When a company repurchases its own stock, it's often seen as a sign that management believes the shares are undervalued.
So it's like they're saying, hey, we believe in our company so much.
Exactly.
We're buying up our own stock.
Exactly. And dividends, of course.
Yes.
Are those cash payments that shareholders receive?
Right.
Dividends are a direct way to share profits with investors.
Okay.
Increasing their dividend, Wynn is demonstrating a commitment to rewarding shareholders.
So they're investing in growth through expansion projects like Marjan Island, but they're also returning value to shareholders through buybacks and dividends.
Exactly. It's a balanced approach.
It is a balanced approach.
That appeals to a wide range of investors.
Okay, now, before we get to our final thoughts and potential risks to consider, I want to make sure our listeners understand a crucial metric that we've been talking about.
Sure.
EBITDA.
Yes. EBITDA stands for earnings before interest.
Okay.
Taxes, depreciation, and amortization.
All right.
It's a measure of a company's operating profitability that strips away certain non-cash expenses and the impact of financing decisions.
So it gives us a clearer picture of how well the core business is performing.
Exactly.
Regardless of how much debt they have.
Right.
Or what their tax situation looks like.
It's a key metric for evaluating a company's operational efficiency and ability to generate cash flow.
So in the context of Wynn Resorts, their strong EBITDA figures across various properties indicate a healthy and profitable core business.
It does.
That's really helpful.
Good.
Okay, now let's shift gears and talk about some potential risks.
All right.
Or challenges that investors should be aware of.
Sure.
When considering Wynn Resorts, every investment comes with its own set of uncertainties, right?
Absolutely. While Wynn has a lot going for it, there are some potential headwinds to keep in mind.
Like what?
For starters, their expansion into new markets like the UAE carries inherent risks.
Right. Building these massive projects in new territories.
It's not easy.
Always comes with challenges.
Right. Regulatory hurdles, construction delays. Potential economic or political instability.
All that stuff.
Yeah.
What else should investors be mindful of?
Well, another factor to consider is the increasing competition in the luxury hospitality and gaming space.
Right. New players are emerging.
Exactly.
Existing players are upping their game.
It's a tough market.
Wynn will need to remain innovative and adaptable.
Absolutely.
To maintain its competitive edge.
Yeah, it's a constant race to stay ahead of the curve.
In a market as dynamic as luxury travel.
For sure. What else?
What other potential challenges?
Well, let's not forget about their debt load.
Right.
While they've made progress in deleveraging, they still carry a significant amount of debt.
Debt can be a double-edged sword.
It can.
It can fuel growth and expansion, but it can also become a burden if economic conditions sour.
Or if revenue growth doesn't meet expectations.
Exactly.
Yeah.
So investors need to carefully consider Wynn's debt management strategy.
Yes.
And their ability to generate enough cash flow.
Especially in a potentially rising interest rate environment.
So to summarize,
Okay.
Wynn Resorts presents a compelling investment opportunity.
It does.
But it's not without its risks.
Right.
Investors need to weigh the potential rewards against the inherent uncertainties.
Of course.
And carefully consider factors like global economic conditions, competitive pressures, regulatory hurdles, and their debt management strategy.
Couldn't have said it better myself.
And that's why we do what we do here at Talk Tickers.
Absolutely.
We break down the complexities,
we do,
analyze the numbers, and equip you with the insights you need to make smarter choices.
Knowledge is power.
It is.
Having a clear understanding of both the opportunities and the challenges is essential for making informed investment decisions.
I completely agree.
Good. It's been a pleasure diving deep into Wynn Resorts with you today.
Likewise.
Remember, this is just the starting point for your own research.
Yes.
Stay curious, explore multiple perspectives, and never stop learning.
Great advice. We'll catch you next time on Talk Tickers.
Sounds good.
Good. Okay, so we've talked about Wynn's successes, their strategic moves, and even some potential risks. But before we wrap up, I want to go back to that mega project in the UAE.
Okay.
Wynn Marjan Island.
Big one.
It's a centerpiece of their growth strategy.
It is.
But it also represents a bit of a gamble, wouldn't you say?
It's definitely a bold move, no doubt about it.
Yeah.
The scale is immense, and they're entering a new market.
Right.
With its own unique dynamics.
For sure.
But, high risk, high reward.
That's true. If they pull this off,
it
could be a game changer.
It could.
For Wynn, it could solidify their position as a global leader in luxury hospitality, open up a whole new world of opportunities.
Imagine a sprawling resort on a pristine island in the UAE.
Oh, wow.
Offering everything from world-class gaming and entertainment to Michelin-starred dining.
Nice.
And ultra-luxurious accommodations.
Wow.
They're aiming to create a destination unlike anything else in the region.
That's a high bar.
It is.
A true magnet for the global elite.
That's the goal.
It sounds pretty incredible.
It does.
And that financing package shows that investors share their vision.
They do.
But what are some specific challenges they might face in this new market?
Well, for starters, they'll need to navigate the regulatory landscape, which can be complex in the UAE.
Okay.
They'll also need to adapt their offerings to cater to the cultural nuances and preferences of a diverse international clientele.
It's not just a matter of transplanting the Wynn Las Vegas experience to a different location.
They'll need to be sensitive to local customs and expectations while still maintaining their brand identity.
It's a delicate balance.
It is. But I think Wynn has a track record of success adapting to different markets.
Yeah, we've seen it.
Like we saw in Boston and Macau. They're not afraid to learn and evolve.
And they've put together a really great team.
They have.
With experience in international development.
Lots of experience.
And luxury hospitality.
For sure.
It'll be interesting to see how they tackle these challenges.
It will.
What innovations they bring to the table.
Yeah. Wynn Marjan Island is a fascinating case study.
It is.
In ambitious global expansion.
Yeah.
And its success or failure could have big implications for the company.
So as we wrap up this deep dive into Wynn Resorts, what's the key takeaway for our listeners?
I think the most important thing to remember is that Wynn is at a pivotal point. They're transitioning from a U.S.-based casino operator to a truly global luxury lifestyle brand.
It's a bold transformation.
It is.
It comes with opportunities and risks.
Exactly. Their success hinges on their ability to execute on these plans while maintaining those high standards that have defined their brand.
Yeah, investors should be watching closely to see how they navigate these challenges
Absolutely.
and capitalize on the opportunities.
It's an exciting time to be following Wynn Resorts.
It is. They're making big bets, pushing boundaries, redefining what it means to be a leader.
They are. It's been a pleasure diving deep with you today.
Likewise.
Remember, folks, this is just a starting point.
Yes.
Do your own research, explore multiple perspectives, and never stop learning.
Great advice. And that wraps up another insightful episode of Talk Tickers. We'll be back next week with another deep dive into the world of earnings calls and all things finance.
Sounds good.
Until then, happy investing.